Good afternoon, traders. This is Christian from Chart Market Trade Group, and it is Tuesday, October 25th. Hope everybody had a great trading day. Very nice trading day here, as well as how we set this up in the morning. Before I get into that, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. So let's talk about a couple of the drivers for the day. There's a few of them or themes, but basically, this was something that let's go right to the bonds. Bonds have been a big driver of this market action over the last few months and actually in this year. So we finally got a bit of a bounce. Note how oversold based on the RSI, which is still, I think, oversold on the weekly chart. The RSI is at 23. So, it's kind of funny that if you open up Twitter, which is kind of sometimes a cesspool, there's talk of like possible intervention and so forth. But really, like, don't you think bonds can bounce one day, off of very oversold levels? So it could be that the Fed is maybe taking their foot off the accelerator in terms of, in terms of all the tightening that they are doing. But it also could be that just bonds are due for a little bit of a bounce. They've been straight down now for a couple months. It did feel like I don't like to say the term capitulation because it's just not a favorite term of mine, but I think that there was a lot of selling done in bonds. Did we retake anything, in terms of technical levels today? No, really not that much. I mean, we did take out that virgin point of control, which was a big technical level that I thought that we could bounce from. We did, and we're up 1.5%. I mean, we really just haven't seen many days like this. 1.5% is not that big of a deal. One day is not a trend, of course, in the grand scheme of things, but just, when you look at 1, 2, 3, 4, 5, 6, 7, 8 red days in a row. So finally, a move back to the 5-period moving average. Also note how deep the price action got below the 20-day moving average. So a bounce was in the cards. I didn't know what the driver was going to be, but keep in mind, markets don't go straight down. They don't go straight up either. There is usually some type of a relief bounce or profit taking that happens. So we'll see if there's any follow through from that. But just a bit of a move like that. Stocks have been acting pretty decent over the last couple weeks, but a help like this in bonds in certain areas of the market are going to take off. Then, if you look at the other side of this, the two of the macro forces, you also had the dollar move in pretty decently. So the dollar was down 1%. Did break down below the 20-day moving average and probably going to find a little bit of support here at the 50-day moving average. But again, it just takes off the pressure that we've been seeing with just straight up headwinds into equities with two of these forces going on pretty decently. So let's go over. So again, I think that's a couple of the driving factors, forces for today. And really, when we look at the indices and talk about what areas participated, this is something that I went over right, from just continuing from what we talked about yesterday when yields were still higher yesterday. My explanation for that, when you look at what the driving sectors were yesterday, it was healthcare, and big healthcare too. Right. It was insurance companies, some of the semiconductors, cheap areas of the market, some of the consumer staples. Those did, and energy yesterday as well. Those did the heavy lifting. Even throw in more of the financials, the banks yesterday too. So those did the heavy lifting yesterday. Today, with the move in bonds and with the move in the dollar, it was your more momentum names of the market, your higher growth names. I think ARK was up. I should have this someplace in here. ARK was up again, just a proxy for growth companies that many of them don't have any earnings, or some of them don't have any earnings. We're up 6.6%. So this is how we set the day up. And, this is what we do at Tribeca Trade Group is, we basically every pre-market, we go over what could be the catalyst, what could be the movers for the day. So I talked about names that I haven't really talked about in a while, but like roadblocks today, right? That was on the list of names to play. ENPH, which is what I traded today. So if you go into our charts this morning, right, and again, I covered these things as we but this was something that I posted right before the open. I don't know why. Oh, 9 o'clock. Yeah. We start our pre-market session right around 9:07, 9:08 in the morning every day. But, here is the setup. Remember, why I liked Roadblocks was because they had strong members. They talked about an uptick in their monthly active users a couple days ago, which lifted them over here. So very nice. I thought ENPH could possibly run into their earnings report because solar has been really dogged, has been not participating. So, when you have a day like this where you've got those two things going on, where rates went lower, the dollar went lower, things like this could possibly catch. And this was up. This is what I traded today. Up 4.8% for the day, very strong. And then just other things that we really haven't seen participated. We talked about CrowdStrike this morning. Didn't have the biggest day in the world, but just for a day trade, even something like a Datadog, which was up 7.7% today. Again, all these things that for me, all these things that are in downtrends for me are just day trades, right? Datadog for me has a lot more work to do for a swing trade, but it's going to catch momentum on days like this. So again, that was the focus. It was not the names that were strong yesterday, but it was names that were going to really fly on a weaker dollar, as well as rates going down a bit. All right, so that's the main story. Let's get to the S&P and let's talk about the technicals, because we do have some developments. I think mainly, so this has been a nice move, right? We've kind of spent a little bit of time trying to get back into value. We managed to get over the month's highs, right? And now the new test is the 50-day moving average, right? So that's probably going to create some type of short-term resistance, but it may not as well. We've managed to overcome these levels before, and for those, I always like to show these things that people are not looking, because every time we get to one of these levels, somebody always says, oh my god, now now we have this humongous thing to get through. It's the 50-day moving average. We're not going to be able to do it. Yeah, we'll look at the Dow. I didn't hear anybody talking about really, oh my God, the Dow's at the 50-day moving average. That means it's going to be the death to the market. The Dow is, again, it's only 30 stocks, but look at it get through, the 50-day moving average really without much trouble. It paused, it rallied up to there back on Friday. And then since then, it's just been kind of cruising along. So, there are definitely areas to watch when you get to a key moving average, but it doesn't mean like just because you're approaching it that it's going to be the death to the market and the market's going to go back the other way. It could, and it's something why we watch and why we pay attention to things like this. So I would watch what happens at the 50-day moving average. Also, what coincided with this is a 1-hour virgin point of control. I sized this up. This is why I took this trade. And I actually gave it some time in this trade, which actually worked to my detriment. But I put on an SPX call spread. We kind of looked at where the S&P could rally up to. I thought it could be 38.80. I gave myself a little bit of room. Again, this was for Friday's expiration. I actually took down this trade today because there was such a move. So I didn't get the full value out of it. I got out of this at 920, paid 580. That's fine, right? I mean, that's good enough. It's not worth all these events that we have to get through. And clearly some of the names that reported earnings today after the close were not stellar earnings reports. So, I could put that trade back on if I want to. We'll see. I don't know if I will at this point, but it worked out quite nicely, and I wasn't expecting it to work that fast, but that's fine. So 38.79 is a level to watch. We could get up to this VPOC and stall. Because there is another one behind it, but we could definitely get up there and stall. We don't have to get up there. We could stall completely at the 50-day moving average as well. Why I'm a little bit more upbeat and not not to say like we can't stall there at the 50-day moving average, is because one of the things that we've noted too is that we've just had much better participation in the market. And one of the indicators that I use for that is the NYSE McClellan Summation Index. You could also use it for for the Nasdaq as well. That's ticker symbol $NASI on stock charts. But you have a bullish crossover, so there's a change in momentum. There is much more participation than what's been happening back in here. So again, it doesn't mean that the momentum is going to carry all the way through like it did last time. But to me, it's a change, and if you want something to trade against, you could watch for the momentum to change. So I stay open to that. I do try to. What's nice about using the McClellan Summation Index is that it takes the emotion out of the situation. When you look at this and you see a bullish crossover with the 10-day moving average, momentum has changed in the market, and you can, if you like to, wait for it to change back, for you to kind of say, okay, that was my sell signal for the overall market. All right, let's spend some time. Again, I think the technicals, even though I talked a little bit about the Dow Jones industrial average, I do think that the S&P is most important. Nasdaq, again, a little bit different looking picture, has not broken through the beginning of the month's prices. It did progress and make it inside value, but I think it's going to be a bit tougher, right? We did also take out this 1 hour VPOC. We actually went a little bit past it. But we'll see what the rest of the earnings reports have this week. Of course, Google is down. They didn't notice VPOC to VPOC on the 1 hour chart, right? Rallied up to here and down here, but they're slowing down. Microsoft too, even though Microsoft isn't down that much, and we'll see what they say about guidance, but it does feel like these companies are slowing down, right? I spent a lot of time talking about these in yesterday's video, how I just am not really, I don't have that many cares about the FANG stocks, because they just haven't been acting like key leadership for some time. So one of the things that I mentioned is that if they do show some leadership, I'm happy to get back involved, kind of like Netflix is showing that it has momentum right now and doing something a little bit different. So, when the picture changes, I'll change along with it. But, it's the same thing for the rest of these names that are going to report this week. Your Amazon, your Apple. Like Amazon, I actually tried to trade Amazon for a day trade today. Just did not, it finished up 65 basis points. It just doesn't have the relative strength anymore. For a while, it used to be like Amazon would kind of lead the market up. It certainly hasn't been doing that in a long time. So what does this mean? It just means that there's other areas that are showing better strength than the FANG stocks. And I get it. People have fallen in love with the FANG stocks. They're the largest weights in the indices. But I'm telling you, if you're not looking at some of the other market participation that's going on, and you're stuck looking at the FANG stocks, you're missing out on, where there's strength in the market. All right. So that said, I just wanted to cover those really quickly. IWM actually led today. I was surprised at this. I wasn't thinking that that IWM would be able to kind of break through its value area for the week, but it did it, and up 2.7%, right? I've heard this argument before about the small caps. Someone said to me a couple of weeks ago, "Oh, the small caps are only going up because there's less dollar exposure, right? Because they're a little bit sheltered from the stronger dollar." Okay, well, what's the argument today? Because the dollar was down 1% today, and small caps were up 2.7%. So go figure for that one. Remember, that's not. Sometimes it's nice to put a nice theme and narrative, that makes you feel real, like warm and fuzzy about an area that's going up, but that was not the case. That was not the catalyst today for small caps leading and going up 2.7%. They're also into the 50-day moving average. All right. So again, we don't have a crystal ball. It'll be something to watch here as the S&P and IWM are at the 50-day moving average. But if you're taking profits along the way, and using these days to collect some money and not getting greedy about, considering that the markets are still in downtrends, then you're that much more ahead of the game, right? So very good price action for the day. It's still going to be, a very noisy week with earnings, because there are 33% of the S&P that's reporting earnings. And then we also have some more inflation data that comes out towards the end of the week, right? We're going to get the we're going to get the PCE deflator month over month, right? And that comes out Wednesday, Thursday. That's going to come out on Friday. Okay, so that's going to be a big data point, right? It's going to tell us the next glimpse of what not earnings, but what inflation is up to. A couple names that I just wanted to go over in terms of charts that I thought were pretty interesting. We've talked about roadblocks already. Goldman Sachs, I love what some of the financials are doing here. We talked about how it got over the 200-day moving average. Nice continuation, not a huge move today, but it actually was down a portion of the day, so gave a bit of let's see, CLFD. I'm just getting to know this one. This is a wireless telecommunications equipment company. Really nice strength. Also, before I forget, because I forgot about this, but look at CALX yesterday, right? More names that are coming out on our earnings strength list. We put together an earnings strength list, every quarter, because often those could be really nice areas of strength. ISRG had a huge move today too, up to this version point of control, right? Another strong earnings names that started to move pretty nicely. And then even things like, things that I talked about in yesterday's video, like a Hershey's, acted very well again today, up, breaking out of this consolidation. A GPC, which we talked about yesterday, also had some continuation. A few other names too, Dollar Tree. I thought that this was interesting yesterday as I was going through charts last night, but Dollar Tree and the retail names, more of the physical store names. Dollar Tree had a nice move yesterday, continuation today. Look at Dollar General. Now I missed this one today. I posted the chart last night, but look at the consolidation here. I think this goes up to that VPOC at 252, and then 5 below, which is another one too, right? Maybe the consumer just changes the way that they're shopping, but I love this move over the 200-day moving average, and I think this one could maybe get up to 158. I'm long this name. Also, I think you can't ignore what's going on in energy. Look at Nat Gas, had a huge day today, up 10%. So even though the energy names were not where the momentum was, I wouldn't take your eye off them. If they consolidate in here, they might end up being some buys. I actually added a little bit of the CEIX because I have a nice level to trade off of. That's 60.93. Notice that it got to this, this was the kiss of death, this version point of control up here. This was up at 73. Well, the stock's down $10, and I think now it might be a good place. I took my final target today on AMR. I'm not sure that the stock is done. It just was a really nice move, and I was targeting 167. I thought that was good enough for the VPOC. It's close enough, so I got out of that name. Also took some more profits in CMCCI today. This has just been such a nice name since it's since it popped. Right, this is another one that I would include in the earnings, even though it didn't report yet. It moved up on strong guidance and up to 67, which is where I took, I think, my last target. But you can see how I traded. Not every trade was perfect today. I mentioned Amazon. I tried trading Amazon today, and I'll trade, like I said, I'll trade the FANG stocks every now and then for a day trade, but just really didn't have any momentum to it. And I got off BMRN because it reports earnings tomorrow after the close. But nice little move. I felt like staying in it for one more day, but I just had such a nice day trading that I just felt like taking profits because I figured that some of these these big names that are reporting earnings are going to may dictate whether the indices are really strong tomorrow or weak. ENPH faded, but moving back up here to 277. This is one that I liked and I played for earnings. We'll see if it works. Just really good earnings history for ENPH. You could see, I think out of the last 12 quarters, it's only gone down twice. So it looks like to be, carrying along that tradition of strong earnings so far. So that's it, guys. Of course, I always bring this up to you guys. But here's our watch list. This was our setups to start the week. Of course, we always find more than that, but take a look at some of these names. Now, I did not trade every one of these, and I'm upset that I missed the shockwave, which was up huge today. Huge jump off of the first 20 minutes of the day. Very strong. In addition, there's the AMR that I traded. SMCI is another one. So again, I haven't purchased every single one of these, but definitely participated in some of these. So we set this up. Not only did we provide the trigger for this on the weekends, but we also provide, in the charts, the targets of where I think things can get to. That was the target ultimately for AMR that I discussed. Where can you go to be a member of Tribeca Trade Group? You can go right to tribecatradegroup.com and you can click on services. Check us out for a month. I would love for people to come in, try it, and give me their feedback. I want this to be a value add for people. I think we do a great job at spotting relative strength, finding the market leaders, finding the momentum, and not worrying about what name it is. If it's not, as much time as I spend on the FANG stocks criticizing them, saying that the momentum is not there, our job is to stay ahead of the trends, and we've been doing a great job doing that. So check us out here. Try us out for 1 month. If you don't like it, let me know, and we'll go from there. But definitely give us a shot here. And if you like the video, certainly give it a like or a thumbs up or whatever you do on YouTube. Thanks, everybody. Have a great night. See you tomorrow.